I would like to start with a review of the main real estate fundamentals in the office market, for example, just to give you the chance to understand what is going on in the market. Actually, what is happening is that the market is completely polarized. Demand is becoming stronger, but it is taking time, the recovery process. During the third quarter, we had only 65,000 square meters of take-up. The good news is that we have 20% of that figure. It was net absorption, but it is not a really high take-up for Madrid. We will see later. But at least, as you can see here, in the last 4 quarters, we have a more active market in Madrid and in Barcelona as well. However, as you can see here, if we take the average of the last 10 years, we are 40% below the average in terms of take-up in Madrid. As you can see, it's the market in Europe which is suffering more in terms of demand. Another characteristic of Madrid is that demand is completely focused on the city center, and as you can see here, 56% of the total transactions took place inside the first ring road, which is the M30. At the same time, the pipeline is almost stopped, and we don't have many projects coming to the market this year. And for the next year, 52% of the total surface that is going to come to the market is committed. So we don't have a lot of speculative surface coming to the market, and these are good news. At the same time, we have started the recovery process in the rental levels. We reached bottom in levels of 24.5 euros per square meter, and probably we will finish this year at a level of 25. What we expect in Rich Arelis, our forecast is that in 5 years' time from now, we will probably reach levels of 30 euros per square meter. With CPI, it will be like 34 euros per square meter or so. And the market is very volatile, as you can see here. But at least we are growing. For the last year, we are growing in terms of rents, very slightly. At the same time, demand is extremely focused in grade A buildings. We don't have good quality stock in the market. It's very obsolete. And this is a really good opportunity to invest in new redevelopments and refurbishment. At the pace of the companies are taking up the good quality buildings, the good surface, at the end of 2017, we are not going to have any square meter immediate available for that companies. So let's see what is happening in the investment market. As you can see here, since 2010 until last year, most part of investors were completely focused in Central and Eastern Europe. Currently, they are more focused in Southern European economies. Much more. And if we share all this light green, which represents Southern Europe, you can see that it has happened exactly the same in Italy and in Spain. I mean, Italy was the protagonist at the beginning of the crisis, but currently Spain is growing in appetite of the investors to take positions in our market dramatically. We will see later. But the third quarter of this year, we reached levels of 3.5 billion invested in Spain in commercial. This is the second highest investment volume in our history. It's a lot. And also, Ireland is performing quite good in that sense. They have had the record as well last quarter with 1.6 billion invested in Ireland. And as you can see here, for core assets, Madrid is growing in the capital value cycle, but also in the core plus assets, we are starting growing again. However, in the secondary market, we will need to adjust at least some months more. You can see in Q2 how was the change in volume invested in Iberia, and it was 140% comparing with the same quarter last year. So, and it was in Q2, and in Q3, as I told you, the investment activity has been really, really hectic. It was really strange because it was on summer, but it was probably because at the beginning of the year, a lot of new companies came to the market, the new REITs, the new vehicles, and they have had a lot of pressure to make deployment of the capital they fundraise. Look at this chart and you will see this is the capital value in the office market. Is an average of the 5 biggest economies in Europe. And here you have Madrid and Barcelona. You can see the spread we have in the peak of the bubble, and you can see how big is the spread now. So at some point it will narrow, and we will have some yield compression adding to the rental growth that we expect, and the result of that is that we are going to converge more to the 5 biggest economies in the European Union. But moreover, if you take back the prices now without the CPI in real prices, you are purchasing now properties in levels of 1998. So you are going back more than 25 years. Another really relevant thing that we had this year, we had 5 transactions in a single asset, over 100 million in Madrid. We have this one, which is the current Vodafone headquarters. It has been purchased by London and Regional, but also we market our own headquarters in Madrid, in Castellana 200. This is a scheme with a hotel, 2 office buildings, and a shopping gallery. This is a very interesting deal as well. This is Edificio España, which has been purchased by Dalian Wanda, by Wang Li, who has been dramatically investing here in London as well. And he purchased this property completely empty. It's very old-fashioned, it's very obsolete. And his plan is to change the use of that building to make a new scheme similar to Castellana 200 with a luxury gallery in the ground floor and in the first couple or 3 floors. Then he would like to have a really luxury hotel of his chain of Wanda hotels. And then probably they will have high-end residential units. But it's completely empty. This other transaction was completely different. This is fully occupied by IBM, and it was owned by Morgan Stanley, who sold this property to a Mexican family office with a long-term contract, and it's a completely different approach. But this one, for example, Castellana 77, is a new property we are marketing now. It's very obsolete, it's completely empty, it's really well located, it's in the Azca district, in the main financial district of Madrid, and a lot of investors have shown a lot of interest for this property. It needs a really big refurbishment of the building, but the location is superb. In Barcelona, it's almost the same. We had 3 transactions over 100 million. Actually, this one is 90, and it is an office building which is occupied by Deutsche Bank and Quatre Casas, a domestic legal firm in Spain, very renowned in Barcelona, and it will change the use to become a hotel. Probably it is going to be the new 4 Seasons hotel in Barcelona. Also, this iconic building, this flagship building, Avenida Diagonal 211, Torre Akbar, has been sold. It's not completely closed, but it's almost closed, and it is going to be the new Hyatt hotel. So in Barcelona, they are managing quite good how to change the use of the offices because they have oversupply as well. So they are changing the use to fit with the demand they have in the hotel industry. This other transaction is Diagonal 00, is a tower that was designed by Calatrava and is fully occupied by Telefonica. They did it's not a sale and leaseback because it was in hands of PPP, public-private partnership, and they sold this property levels of 107 million, which is, it results in a very low yield, lower than 6%. Another trend we had at the beginning of this year are the public disposals. The Generalitat de Catalunya, which is the regional government of Catalonia, they marketed again the second big portfolio of 13 properties. They did it the same last year, But they sold last year in levels of 9%, while this year they have sold these properties closer to 7%. In both cases, in the first one last year, it was purchased by Swiss insurance company, AXA. AXA Real Estate was acting on behalf of the insurance company, and this year was Zurich who purchased this property for 201 million. Shopping centers. I think shopping centers are now the protagonist of the market. We have had a lot of transactions and a lot of interest from many different foreign investors, specialized and not. We had single transactions, very iconic buildings and very iconic schemes like Gran Via de Vigo or El Boulevard. Both of them, one was in hands of ING Real Estate Development, the other one was in hands of CBRE Global Investors. They disposed both assets and this one as well. But we also had three really big portfolios. One was this one. It was in hands of the Dutch company of Basnet. They sold this property to a consortium of Green Oak, Baupost, and Grupo Polar, which is a domestic firm. They are developers, they are managers, and they are also investment managers through the arm they have issued as a SOCIMI, as a new REIT. But also, we had a really big disposal of 65 shopping galleries that were in hands of Clepier, and they sold these to Carrefour Properties. At the same time, Carrefour Properties sold a portfolio of 4 shopping centers to Carmila, and these are the biggest portfolios have been marketed. But also we had some really iconic buildings like Marineda. Marineda has been the biggest transaction in the shopping centers industry for the last 8 years. It was a 265 million transaction, so it was quite big transaction for the market conditions we have currently. So in terms of yields, as you can see, for the last 3 quarters we have had a strong compression on the yields in almost all the sectors. Okay? The one that has compressed more is the shopping centers industry. We didn't have appetite to take positions in that sector at the beginning of last year, but after summer of 2013, I think the investors, they changed how they were analyzing the assets, because the household incomes were increasing and the sales had been changing, increasing year and quarter on quarter for the last 18 months. So currently, the most specialized investors, they are trying to get some of these good assets which have been in market and which is very difficult to find in other momentum. Let's see this example. For example, this is the average in the capital values, the rents and the yields in the office market of Barcelona. And as you can see, in terms of rents, currently they are in bottom for the last 20 years. Okay? At the same time, in terms of yields, they are in the average. And in terms of capital values, they are almost in the bottom as well. So it seems like it's the right time to access that market. And a lot of investors are taking positions in the Barcelona market. It's much more stable than Madrid. If you remember, the volatility on the rents of Madrid is completely different in Barcelona. The range is narrower. How is the comparison between the German bonds, Spanish bonds, and the yields? Now it seems like it makes sense. The spread with our sovereign debt, it makes sense to take positions in our market. Previously, before 2012, it was almost impossible to find any investor that decided to take positions in our market, while our government was issuing bonds in levels of 7%. But currently, the situation is completely different. I don't know how long we'll be so stable, but unless it go up to 4%, it will continue. I mean, we expect to have a very hectic market in the next at least 12 months. Just to give you an example, this is the number of transactions that took place in 2012, 13, and this year in the first 3 quarters. And as you can see, this year we have signed 236 transactions, which is a lot for our market. But if we see the volume, we have been doubling and doubling year on year. Okay? And in terms of ticket, the ticket this year is higher than 2012. 2013 was very strange because we had a lot of very small transactions, okay? And because of that, it seems like it was an inflection point in 2013, and then again, we went back to the levels of 2012. But the reality is that this year, we had a lot of really big transactions, of really big assets. As I showed you before, we had 5 offices buildings over 100 million, which is a lot for our market in Madrid. But the most relevant is that we have been doubling in the total commercial real estate, but if we go through the different sectors, we have been doubling in all of them. And these are really good news, because industrial and logistics is also in the recovery process. For example, some really active investors like Blackstone or Prologis have been very active looking for properties and closing deals. But also, as I told you before, retail has been really, really active. As I anticipate in the last presentation I delivered in PropertyEU, the correlation between the real estate investment activity and the economy, the growing in the economy in Spain is really, really narrow. It's like a perfect binomial always, okay? And last year, I anticipate, okay, it seems like 2012 was the inflection point. Last year, we had a very good investment volume, and probably I was anticipating that this year it was going to be much higher. Actually, we are now in levels of 7 billion with this 600 million that has been closed in the first 20 days of October. So probably we will finish this year in levels of 8,000 million. The reality is that I am only taking into account here real assets, but if you take into account the bank platforms, the NPLs, some transactions through the debt, probably we are in levels now of 15,000 or so. And the market is showing like it's much more healthy. In the office market, for example, is very balanced, Madrid and Barcelona, in terms of the volumes they are receiving as an investment destination. Is exactly the size of the market. Madrid is almost double size of Barcelona, and Barcelona is receiving more capital in comparison with the size of the market because it's much more stable. So, as I showed you before, 30% has been invested of the total amount this year in the office market, and in retail, industrial is growing, the capital flows are coming. This is not reflecting what is exactly happening in the market, because it's surprisingly to see that 44% of the capital was Spanish. Well, actually it's not. Actually it's not, but the SOCIMIs, the REITs, has been very active, all of them. And we take into account these investment vehicles as Spanish. But the reality is that 90% of the capital they fundraise is from abroad. So the reality is that probably this is not 44%, but I would say 14%. The 30% rest is on the other part, is capital from abroad. We are receiving capital from Europe, again, a lot. North America was the main issuer of capital coming to Spain last year. This year, we are receiving much more capital from Europe, and as we will see later, we are receiving capital from Switzerland, from Germany, from Netherlands. I mean, it's much more core capital than the opportunistic capital that used to come in 2013 and 12. However, which is really interesting for us, is that we are receiving a lot of capital from what we call emerging markets for Spain, which is the north of Latin and the south of Latin America. We are receiving a lot of capital from Mexico, but also from Argentina, from Chile, and from Colombia. At the same time, Asia Pacific is quite active now. Chinese investors are looking for properties, but some other investors, relevant investors from Singapore and from Hong Kong, they are purchasing properties, like Hari Mohinani. He has been investing a lot at the beginning of the year. Dalian Wanda continue interested in increasing the exposure to Spain. And very recently, it is not reflected here because it was at the beginning of this month, we closed a very relevant deal in which GIC injected almost 400 million in GMP, which is a non-listed property company. It's a really good quality assets what they own, and it has been participated by GIC. It is another extra 400 million that I will have to take into account at the year end. So USA and China and Singapore and Qatar has been very, very active this year, but also we have received from India or from Brazil, we have received capital as well. This is how has been the evolution from the first 3 quarters last year to the first 3 of this year. And as you can see, we have a huge decrease in this, which is representing others. In others, we have alternative investment or fully let residential portfolios from the banks or subsidized housing from the regional or national governments. And we have a lot of transactions at the beginning of last year in this sector. Because of that, it has been decreased a lot. There is a lot of appetite to invest in this segment. The problem is that there is a lack of product and it's very difficult to find this kind of product for the investors. The most active investors, in my opinion, have been the SOCIMIs for sure. Okay, they have fundraised almost 3 billion and they deployed almost 80%, between 80 and 85% of the total amount they fundraised. So they have been quite active. Also the institutional funds, but at the same time family office continue investing a lot. And another main trend that we have this year is that we don't have only single asset transaction. We have really big portfolio transactions. In the office market, we have closed all these portfolio deals. Oncisa was a company that sold 9 buildings to a SOCIMI. The same SOCIMI, Hispania, purchased this other portfolio, which was formed with a couple of hotels and 4 offices buildings in the north part of Madrid. Then Berlhave, they decided to leave Spain and they sold all the properties they had. 1 logistic platform, 2 offices buildings in the city center, really well located, really good staff, and 1 shopping center, very dislocated in the north part of the city, but is 60 kilometers from the city center. I mean, it's very dislocated. At the same time, global investors, they have been disposing some shopping centers, but also logistic platforms. And generally, that the Catalonia, in this case, is the portfolio I showed you before. In the retail market, we have the Klépierre, the Carrefour, the Basnet, and the British Land portfolios I told you before. And then in the logistics, we have Gran Europa, which is a domestic company. It's a huge company. We have sold a really big portfolio to Blackstone, to Logicor. It is a 320,000 square meters portfolio in the main corridor of Madrid, in the Henares corridor. And it has been the biggest transaction in terms of size, in terms of surface in our history. Not in terms of price, because of the adjustment. We have a huge adjustment in the prices, in the cap values of the logistics, almost 50%. So, and 7 billion, but this was part of a pan-regional portfolio that they sold to Logicor as well. Well, this is what I told you. The IPOs in Europe, as you can see here, Spain has been the most active country in fundraising capital to issue REITs. The SOCMIs that are acting in the market now are the ones that you can find here, but we also have new investment vehicles which are called FAB, which are designed to co-invest with the bad bank, with Sareb. The two that are now on market are the Project Bull and the Project Teide. Both of them has been participated by Sareb, and in one case by a US investment fund, and in the other case was an investment fund from US as well, but also with a domestic company. Well, so as a conclusion, the perception of Spain as an investment destination has changed dramatically based on some evidence of economic improvement, but also a consensus about near-term stabilization and growth. The disconnect between risk and potential returns has been strongly reduced, and core continues to be narrowly defined. Investors are still able to realize outsized returns from the risk assumed. These potential arbitrage opportunities will decrease as the perception of Spain continues to improve. It is now time to continue thinking in double-digit yields in Spain. It is going to be very difficult to find this kind of deals, honestly. Investors with sufficient investment capacity and willingness to assume some risk can expect double-digit, but you have to assume some risk, big risk. And what is the opportunity? In my opinion, in bigger ticket assets, debt close to maturity, for example, good asset or good location with capex requirement. As I told you at the beginning, we don't have oversupply in grade A buildings, and at the pace we are absorbing this kind of surface in the third quarter of 2017, we are not going to have any immediate availability in this kind of product, so it's time to refurbish some of the old stock we have in Madrid, for example. Another opportunity is good companies over leverage that go for sale and lease. Some IBEX companies, for example, like the Telefonica I told you. Some public sector sale and lease in levels of 7%. It seems like it's a good deal. And the rating of La Generalitat de Catalunya or Andalusia is decreased. I mean, is quite stable now. So the risk has decreased a lot. Some NPLs portfolios like Campeon project or like Amazona project that has been closed very recently. And supply segmentation is key to separate the good from the bad. Retail, for example, you can get some really good opportunities in those regions we have moratoria. It means that you are not going to have a lot of competitors since the regional government is not granting licenses for new projects. Some resorts in Costa del Sol, which is now again growing in terms of appealing for the investors and from the individuals which are purchasing single properties. Good locations with not so good assets or with a high vacancy. I mean, those assets where you need to put a high management to add value. And student housing and health sector is now very trendy. A lot of investors are looking for this kind of alternative investment. And logistic portfolio lease, really big portfolio of logistics where you can find some opportunities higher than 8% in terms of yields, and it's a really good opportunity. So why to invest now? The Spanish cycle is very volatile, as I showed you before. Main structural reforms are being implemented by the government, and you can benefit from that. Banks are not lending, just refinancing, so if you can inject some finance, you can make some good deals. Prices close to replacement values in some cases, mainly in the outskirts of the city. Rental levels have already adjusted heavily, and they have started slightly, but they have started growing again. Good quality stock is not in oversupply. Again, is one of my main messages because I think is one of the best opportunities you will have to start adding value in some good plots of land in some parts of the city and refurbishments and redevelopments of some buildings, and smart money coming into legacy situation being addressed.